Hello everybody, this is going to be a recap of Monday's trading of October 6th, okay? I'm going to be breaking down every single swing point, every single major swing point, why they formed, what time it formed at, and your best possible entries that you could have gotten into each swing, okay? So, let's first talk about the run into sell side here, okay? This first major run into sell side. Now, during this whole run, I was anticipating during my whole trading day, this will be our manipulation, right? So, this whole run on sell side, I was expecting this to be manipulation, and I was expecting this run higher, above here, back into new all-time highs, okay? So, why was I anticipating this to be our manipulation, okay? And how do I know that we weren't going to come, let's say, back down to these lows, for example, or midnight opening price? Okay, so first reason was intermarket relationship. Okay, always pay attention to what the other highly correlated asset is doing. If you're not paying attention to what ES is doing while you're trading NQ, there's going to be a very low chance of you getting high probability entries. Okay, now why did this mean anything to me when I was looking for a run into sell side before I started longing? Okay, why I was looking for this run into sell side is where ES was compared to NQ when 930 opened up. All right, so let's talk on that a little bit here. 930 on both assets opened up right here. Okay, let me zoom in so you can see. Both assets, 930 opened up above our midnight opening price. Okay, as you can see, ES opened up above, NQ opened up above. Now, as ES was opening up, I was monitoring the reaction to this midnight opening price, okay? And I had this first presented fair value gap open on my chart because this right here was a really important reference point for me to look out on to see if we're going to continue to see low prices below this low on ES, not in Q, on ES, to then begin to see longs forming from there, okay? So, once I saw at 938 and 937 us retreating back into the first presented fair value gap and closing back out of it, I knew straight away, bang, ES is going to have this run underneath the sell side, underneath the current day low, okay? So this is the current day low, and I wanted to see the run, and I wanted ES to run beneath this low right here, back into new daily low, okay? And that's exactly what we saw form, okay? Now, as soon as ES ran this, our intermarket relationship literally just threw out the window, okay? So, while NQ was, messing around a little bit here, ES just started running higher. Now, this is actually what I wanted to see happening on both assets, but because only ES started running, this basically just meant that NQ had to catch up, okay? Because remember, for both assets, the target was current day high, right? So, when you saw our market structure shift happening, well, our first proper market structure shift actually occurred when we closed above these highs. Okay, so this is our first proper market structure shift. Oops, that was the first one. Now, the reason why this one didn't work out, first of all, was again because of that intermarket relationship. Second of all, we didn't have like a closer SMT, right? So if you watch some of my lectures, you should know that I utilize external and internal SMTs. This right here was our external one. This is our major SMT that I'm waiting for to see that SMR form, okay? But okay, yes, we have this major SMT, but our reversal can form here, it can form here, it can form even all the way down here, right? And we still have that SMT. So to confirm the SMR, I then need a second SMT called my internal SMT. So after this external SMT was formed, this is usually with some form of time-based range. I need a second SMT forming with either a smaller time-based range or within, let's say, the same hour, right? So that could even just be a candles candle SMT or just a smaller SMT. Okay, and that is actually what we see appearing over here. Okay, so while NQ is reaching all the way down here, this is when we see ES just running. Now, I never traded after this point because our intermarket relationship again was kind of ruined. It was kind of in shambles. So once I see this occurring and both assets being kind of, you know, NQ's down here, ES is running higher, I'm pretty much just uninterested, honestly. Like, yes, this can run higher, and man, you just need to let it run. Okay, because when you notice that and you know that a specific target needs to be met, and you know your intermarket relationship, we're in high resistance liquidity conditions. In my opinion, there's no point getting into that move. Like, okay, yes, you know it needs to get there, and you know the run should happen now. But the thing that you don't know is, you know, are we going to come down below this specific low again? As you know, we are in very high resistance. As you know, we are in very, very high resistance conditions, and it's just not worth getting into that move if it's going to be so slow that, you know, it's going to take an hour or two to get to a, let's see, 73-point target, right? So, in my opinion, it's not really worth it. If you're happy sitting in these really high resistance conditions, then, you know, you do, you know. But in my opinion, I don't really care about this whole move. Anyways, moving on. This would have been kind of your ideal time to get in around here. If I was still trading at this point, my entry would have been at 11.12 right here. Okay, because this was the open of my distribution phase, so I knew as soon as I see some form of internal liquidity getting swept, I knew that this thing should just keep on running high. So if I was still trading after this point, I could have entered beneath this here and having my stop here, doesn't really matter. I know this could have been safe and then focused up here, right? So that was your sort of first trade that you should have really been taken, right? Your really first trade of the day could have actually been into the sell side run. So it could have been in this retracement here, into this gap here. I'm not really going to talk too much about how you could have anticipated this, but there was a very specific price range up here that we reached into at a very specific time. So after 8.21, mark this time out. After 8.21, again, all you're waiting for is some form of internal liquidity to get swept or an inefficiency to get ran into. That was that. We can then see, you know, our into sell side stop above there. Focusing our low down here. But remember, we're focusing and we're paying attention to that intermarket relationship. ES took that low out. NQ doesn't need to take it out anymore. So after, let's see, this sort of point, you should just be taking profits, right? So kind of after like 9.50, you should have been taking profits for around 5R if you took that short there. Now, last and final trade of the day was this short over here, okay? So this PM short for power hour. Now, this short was actually pretty damn clean, if I'm being totally honest. For me, I didn't take this because, as you can see, I have no external SMT to play off. So if I don't have an external SMT, I typically skip the trades because they're usually slower, and you know, a lot of the time we might wick up one more time and then drop. So if I'm ever taking a trade without a external SMT in play, I always have to wait for a specific distribution time to open up for me. Otherwise, I'm literally just uninterested. Because entering inside the manipulation is always nice. You get those, you know, higher risk to reward trades. However, entering inside of distribution when you know the large distribution is going to occur, you catch those, those low resistance liquidity runs which you're really looking for, right? You don't really want to be focusing on those high resistance liquidity runs. You want to be focusing on those low resistance liquidity runs when you know they're going to happen. So distribution open sits around here somewhere. So literally, again, just waiting for an inefficiency to get run into. Boom, short down to your objective, okay? Objective being this sell side run over here. As you can see, we have these engineered liquidity pools here. This should have been at least a partial for me, and you should have really known to take a full profit here because of the time, right? It literally got reached bang on 4 o'clock, so if you weren't really taking profits here, you would have been pretty silly, right? Because, again, market closes at 4 p.m., so if you don't take any profits after this time, I don't really know what you're doing, because you're going to be sat in very, very low volatility. So those are kind of the three major plays that you could have took today. Today was really pretty hard to navigate, purely because it was so hard to spot the real SMTs, right? The real SMTs was really hard to spot during this time of day. Okay. But sort of after this is when we started clearing up. Intermarket relationship came back. We became correlated again. And any time after this, you could have caught really nice longs and shorts if you caught that short there. Okay. So now, last thing I kind of want to talk about is a high time frame here. Again, for this short, high time frame supported these shorts by our turtle soup. And this is another way of spotting external SMT. We have this SMT here, right? Well, technically there. We have those SMT there. So if you want to just be sitting on the high time frame waiting for 2 SMTs, you can get extremely high probability moves. And to be honest, if you're happy taking 3 trades a week, this is how you want to be doing it. Okay, sitting on that hourly to 15-minute chart, just waiting for your first SMT, and then the second one to be a turtle soup. Any entry that you get on your 1-minute time frame, any form of CSD, that being a unicorn, right? That's where you want to be entering. Okay. So I'll kind of talk over the first possible entry you could have gotten into here, into this long, which would have been technically this breaker for me. As you know, if you watch me, I love my unicorn models. So your unicorn range, this would have been here, right? So you got your breaker here, got that gap there. This would have been my first possible entry. So, oops. That would have been my entry. We must stop below there. Now, of course, this is a very large stop. Really, I would have my stop below these bodies. Because, give it a bit of room, of course, but these rejection blocks shouldn't actually get retraced back into because of the time that they were formed at. So any point after this would have, again, just been fine, because you know that you have these external SMTs and internal SMTs supporting your idea. Now, again, another form of entry is your entry SMT. Your entry SMT just being some form of candle-to-candle SMT or some very close SMTs. Again, just supporting into the bias of your trade, right? So if we could drop down to the 1-minute chart. After this turtle soup formed, which again, I'm always talking about turtle soups, right? Turtle soup, SMT, that's the source right there. After that, if you see a unicorn form, that unicorn's going to be extremely high probability. Those are the unicorns you want to be taking. Now, of course, yeah, you don't know the predetermined price levels to confirm these unicorn levels, but if you just sit on here and just trade them, you're going to be perfectly fine and dandy, right? Because with this, you can honestly achieve like a 75% win rate just trading the double SMT unicorn model with turtle soup. Okay, so where could have your entry SMT trade occurred, right? So as you can see, this is where we see that SMT there. So this is your external SMT when we're utilizing entry SMT here. And then all we're waiting for is something to get retraced back into while we have SMT on specific swings. So we don't have SMT there. We will literally just be waiting until one of these swings get taken out. Okay, right here. Okay. Oops. This here would have been your first sign of entry. As you can see on ES, they made equal lows on IQ, took it out. So after this close here, you could have you could have took this after that close for, again, 7R. I don't know about you, but 7R I'd be much more than happy with, right? Because again, that's within your unicorn range. Everything lines up for this long here. Okay? So, that was my analysis of today's trading. Probably tomorrow, I might go over psychology a bit more and a bit more on the high time frame. I might also go a bit more in depth about timing, because I know timing is a lot of things that people struggle with. They can't time distributions, they can't time the manipulation, they don't really know what's going on, because again, they don't know about time. Time literally just verifies everything. Okay, because you should know when your Judas swing's happening and when your distribution's happening. Okay, by the time your distribution is opened, you'll know which way that distribution's going, because your manipulation has gone in the opposing direction. Okay, so that's that. Yeah, if you want to learn about proper real AMD and how to predetermine this, the day before, even for the whole week, the whole month, the whole day, the whole hour, 4 hours, you can join my DLS mentorship below. That will give you all details of how the market truly runs on AMD. You'll also learn all your predetermined price levels, how to validate specific PD arrays, and which delta soups are true, and the real draw on liquidities, real delta soups, etc. You'll also learn real external SMTs. So not all SMTs can be external, because it's all based around time. If you understand specific timings, those SMTs that you find converging on those times, those are going to be the real SMTs that you want to be paying attention to. Right, so I hope to see you all tomorrow, and I'll see you in the next one. Goodbye.